Step inside the high-stakes world where $200 million was made through illegal secrets. It's March 15th, 2019. Wall Street is buzzing with its usual energy. Traders are shouting across floors. Screens are flashing green and red, and fortunes are being made and lost by the second. But in a quiet corner office overlooking the Hudson River, something extraordinary is about to happen. A man sits at his computer, his finger hovering over the mouse. In exactly 37 minutes, Netflix will announce their quarterly earnings. The numbers will shock everyone. Subscriber growth will be lower than expected, and the stock will plummet 12% in after-hours trading. But here's the thing. This man already knows all of this. He's not guessing. He's not analyzing market trends or reading tea leaves. He has the actual earnings report sitting right there on his screen, 2 full days before Netflix releases it to the world. In the next 5 minutes, he'll place trades worth over $8 million. And by tomorrow morning, he'll be $3 million richer. This isn't luck. This isn't skill. This is the beginning of the most sophisticated insider trading operation Wall Street has ever seen. Between 2017 and 2021, a group of hackers executed what federal prosecutors are calling the largest cyber-enabled securities fraud in American history. They didn't rob banks with guns. They didn't break into vaults with explosives. Instead, they did something far more elegant and infinitely more profitable. They hacked into the very heart of the American financial system and stole information that was worth more than gold. Over 4 years, they generated profits exceeding $200 million. They targeted some of the biggest companies in the world: Apple, Microsoft, Tesla, Amazon, names, stocks you probably own, and for years, they operated completely under the radar. But this story isn't just about money. It's about how a small group of individuals managed to outsmart an entire system designed to prevent exactly what they were doing. It's about the digital age's most sophisticated financial crime and how the perpetrators almost got away with it. Almost. Because what they didn't realize is that every digital footprint leaves a trace. Every hack creates evidence. And eventually, those traces would lead investigators straight to their door. The mastermind behind this operation wasn't some teenage hacker working from his parents' basement. He was a respected businessman with connections to the highest levels of government. He owned luxury cars, private jets, and million-dollar watches. To the outside world, he looked like any other successful entrepreneur. But behind the polished exterior was a criminal mind that had figured out how to game the system in ways that most people could never imagine. The scheme worked like this. Before any major company releases their earnings to the public, those numbers have to be processed and formatted by specialized firms. These companies, known as filing agents, receive the raw financial data and turn it into the official documents that get submitted to the Securities and Exchange Commission. For a brief window, usually just a few days, these firms have access to information that could move stock prices by billions of dollars. Information that, in the wrong hands, becomes a license to print money. That's where the hackers came in. They didn't need to break into Apple or Microsoft directly. They just needed to get inside the computers of the companies that handled Apple and Microsoft's financial reports. Companies with names you've probably never heard of, but that process the earnings for hundreds of publicly traded corporations. Companies that, it turned out, had security systems that were laughably easy to penetrate. The first target was a firm called Donnelley Financial Solutions. Based in Chicago, Donnelley had been handling corporate filings for decades. They were trusted, established, and completely unprepared for what was about to hit them. The hackers didn't announce their presence with digital fireworks or ransom demands. They slipped in quietly, like digital ghosts, and began copying files. Thousands of them. earnings reports for companies worth trillions of dollars combined. All of it sitting unprotected on servers that might as well have had welcome mats for cyber criminals. But Donnelly was just the beginning. The hackers soon expanded their operation to include other filing agents. Top and Merrill in New York became their second major target. Then they started going after smaller firms, casting an ever wider net to capture more and more insider information. Each successful hack gave them advance access to earnings reports that could predict whether stocks would soar or crash when the numbers became public. The beauty of the scheme was its simplicity. Once they had the earnings reports, they didn't need to be financial geniuses to know how to profit. If a company was going to report better than expected earnings, they'd buy the stock and watch it rise. If the numbers were disappointing, they'd short the stock and profit from its fall. They were essentially trading with a crystal ball that showed them exactly what would happen to stock prices days before anyone else knew, and for a while, it worked flawlessly. The trades looked legitimate because they were being placed through established brokerage accounts. The profits, while enormous, weren't so large that they immediately triggered regulatory attention. The hackers had found the sweet spot between maximum profit and minimum scrutiny. They were making millions without anyone noticing. But every perfect crime has a flaw, and this one was no exception. The hackers had assumed that their digital tracks were covered. They believed that the sophisticated tools they used to mask their identities would keep them safe from law enforcement. They thought that by routing their communications through encrypted channels and hiding their trades across multiple accounts, they would remain invisible. They were wrong, because while they were busy counting their profits, investigators at the Securities and Exchange Commission were starting to notice patterns. Unusual trading activity right before major earnings announcements, profits that seemed too consistent to be based on legitimate research. Red flags that, when connected, began to paint a picture of systematic fraud on a scale that shocked even seasoned financial crimes investigators. The investigation that followed would span multiple countries, involve dozens of federal agents, and ultimately expose a web of corruption that reached from the streets of Moscow to the trading floors of Wall Street. It would reveal not just the identities of the hackers, but the sophisticated methods they used to stay hidden for so long. And it would show just how vulnerable the American financial system really is to those who know how to exploit its weaknesses. The turning point came on a Tuesday morning in October 2019. Sarah Chen, a cybersecurity analyst at Donnelly Financial Solutions, was reviewing server logs when something caught her attention. Data packets were being sent to an IP address she didn't recognize. The transfers were happening at odd hours, usually between 2 and 4 in the morning, when most employees had gone home. At first, she thought it might be a routine system backup or maintenance procedure. But when she checked with the IT department, nobody knew anything about it. Chen dug deeper. The data packets weren't random system files or routine updates. They contained earnings reports for major corporations, documents that weren't supposed to leave Donnelly's secure network under any circumstances. Someone was stealing their most sensitive information, and they'd been doing it for months without anyone noticing. Chen immediately escalated the issue to her supervisor, who contacted federal authorities within hours. The FBI's Financial Crimes Unit received the call on a Wednesday afternoon. Special Agent Marcus Rodriguez had seen plenty of insider trading cases during his 15-year career, but this one felt different from the moment he heard the details. The scale was enormous. The sophistication was unprecedented, and the perpetrators had been operating for years without detection. Rodriguez assembled a task force that included experts from the SEC, the Treasury Department, and Interpol. Their first challenge was figuring out exactly what had been stolen. Donnelly's servers contained earnings reports for hundreds of companies spanning back several years. The hackers had access to financial data that could predict stock movements for some of the most valuable corporations on Earth. But identifying the stolen information was only the beginning. The real challenge was tracking down who had taken it and how they were using it to profit. The hackers had covered their digital tracks well. The IP addresses traced back to servers in countries with limited cooperation with American law enforcement. The data had been encrypted and routed through multiple networks designed to obscure its true destination. However, the investigators had one crucial advantage. They knew exactly when the information had been stolen, and they could cross-reference those dates with trading activity in the affected stocks. If someone was using the stolen earnings reports to make trades, those transactions would show up in brokerage records. All they had to do was find the pattern. What they discovered was staggering. In the days and hours before major earnings announcements, certain trading accounts showed an uncanny ability to predict which direction stocks would move. These weren't lucky guesses or brilliant analysis. The timing was too precise. The profits too consistent. Someone was trading with perfect information, and the numbers proved it. The investigation revealed that the hackers weren't just stealing from one filing agent. They had infiltrated multiple companies that handled corporate earnings reports. Top and Merrill in Manhattan had been compromised. So had several smaller firms that specialized in SEC filings. The scope of the operation was breathtaking. The hackers had essentially tapped into the entire ecosystem of companies that processed America's most sensitive financial information. But perhaps most shocking was the discovery of just how easy it had been for the hackers to gain access. Many of the filing agents used outdated security systems that were vulnerable to basic hacking techniques. Passwords were weak or hadn't been changed in years. Software updates were delayed or ignored entirely. The companies handling billions of dollars worth of market-moving information had security systems that wouldn't have been adequate for a small retail business. As the investigation progressed, a clearer picture began to emerge of who was behind the operation. The stolen data was being sent to servers in Eastern Europe, specifically to locations in Russia and neighboring countries. The trading activity showed sophisticated knowledge of financial markets and access to substantial capital. This wasn't the work of amateur hackers looking to make quick money. This was an organized, professional operation with significant resources and expertise. The breakthrough came when investigators discovered that one of the hackers had made a critical error. During one of their intrusions into Donnelly's system, they had forgotten to activate the software that masked their real IP address. For just a few minutes, their actual location had been exposed. That slip-up gave investigators their first real lead on the identity of at least one member of the hacking group. The IP address traced back to an apartment building in Moscow. Cross-referencing utility records, lease agreements, and surveillance footage, investigators were able to identify a potential suspect. His name was Ivan Yermakov, and he had a history that immediately caught the attention of American intelligence agencies. Yermakov wasn't just a cyber criminal. He was an officer in Russia's Military Intelligence Service, the GRU, with a track record of high-profile hacking operations against American targets. This revelation transformed the investigation from a financial crimes case into a matter of national security. If Russian intelligence officers were systematically looting American financial markets, the implications went far beyond the money involved. It suggested a coordinated attack on the integrity of the American economic system itself. But Yermakov wasn't working alone. Further investigation revealed connections to other individuals, including a businessman named Vladislav Klushin, who operated what appeared to be a legitimate cybersecurity firm in Moscow. On paper, Klushin's company provided security services to Russian government agencies and private corporations. In reality, investigators suspected It was a front for one of the most profitable cybercriminal operations in history. The story of the $200 million insider trading heist reveals something unsettling about the world we live in. A small group of hackers, operating from apartments and offices thousands of miles away, managed to systematically loot the American financial system for years. They didn't need armies or weapons. They just needed laptops and the knowledge that the companies processing our most sensitive financial information had security systems that belonged in the 1990s. Vladislav Klushin and Ivan Yermakov thought they were untouchable. For years, they were right. They lived like kings, buying luxury watches and private jets with money stolen from American investors. They operated with impunity, confident that their digital footprints were covered and their identities would never be discovered. But in the end, technology that helped them commit their crimes also became the evidence that brought them down. Today, some of the conspirators are behind bars. Others remain at large, protected by governments that have no interest in cooperating with American justice. The stolen money, most of it, was never recovered. And while security systems have been upgraded and new protocols put in place, the fundamental vulnerability remains. Our financial system still depends on companies and individuals who hold information worth billions of dollars. And where there's that much money at stake, there will always be people willing to break the law to get their hands on it. The hackers proved something that should terrify us all. In the digital age, the biggest heists don't require masks or getaway cars. They just require patience, skill, and the knowledge that somewhere in the system, someone has left a door unlocked. Thanks for watching. If you enjoyed this video, please hit the like button, leave a comment below, and don't forget to subscribe for more. Check out more videos on our YouTube channel. I'll see you there.